Well, good afternoon, everyone. It's great to be here. Thank you for joining us, and thanks to the Milken Institute as well for convening us on this very exciting week to discuss the future and the present of finance, and especially in this panel in particular, North America, right? It's been on the news so much. It seems that every other week there's a new development that seems like things are going to change dramatically, but then at the end of the day, is the needle really moving, or is this an opportunity for North America to become more integrated than ever? So that's one of the things we're going to explore in our panel today. And I think one of the core questions I'd like all of us to keep in mind, and we'll come back to this at the end of the panel, is what will North America look like in 5 years? We're seeing a lot of change in the moment, but that's what investors care about, right? The medium, the long term, so that they can be making the decisions that they need to plan ahead. So without further ado, I wanted to thank and introduce briefly our speakers. First of all, we have Sarah Salih from State Street, Eric Martrell, CEO of Bombardier, Eric Kutcher, Senior Partner for North America at McKinsey, at the Ruben Koppel of Van Koppel and Afore Koppel. Thank you for joining us today.
Thank you.
So, Eric Kutcher, I'd like to start with you to give us a bit of a macro standpoint, a macro view, about how we're looking at the future of the North America trade bloc. Where do we stand in terms of competitiveness and growth as a region, and what are the main opportunities for sustainable growth?
Yeah. Nothing like starting with the easy question. So, look, I am remarkably optimistic about North America's future and its importance in the global economy. I mean, I just start from that as a premise. And I am, you can watch the emotions and the sentiments of what I have seen as a number of executives that I talked to, and it's been kind of bouncing along in different forms. But I actually do think there is general optimism, especially if you look out medium and long term. And I think there's an awful lot when you think about the level of innovation that comes here, the size of the markets that are here, and when working well, the amount of trade that kind of happens between and across all of the borders that kind of define North America. I do think at the same time, we have to be realistic about the world that has kind of gotten us to this point may not carry us forward at the same way. And I think there are real fundamental challenges, and I will probably talk a little bit more in the context of the US from this point. But we should recognize that the overall budget deficit is unsustainable, right? That's not something which we can continue to ignore. We can continue to try to ignore, but the reality is it's getting harder and harder as you have interest rates that are increasing. You do have trade imbalance, right? And some of that trade imbalance does have to get reconfigured. You have a real labor shortage. I mean, one of the things that we often forget is even the most recent numbers, I think we're still at 4.2% unemployment in the US. And the reality is when you look at that, you have a US economy, and I suspect it's similar certainly in Canada and to some degree Mexico, of we are seeing a shrinking population, right? And so, we can talk about all the things we want to move back into North America, but the reality is where's the labor come from? And so we have this unique moment, and this is where my optimism comes from, is I do think we are now entering the fourth real industrial revolution. And we can spend time on what the first three were, but every one of them had a period of 30 years of incredible productivity and prosperity. And I kind of look and say, I do believe that's going to be the case again. And it's coming at a moment in time where we need productivity because we don't have labor growth. And so I look at that and say, if you take a slightly medium-term lens, there should be a lot of goodness.
Sarah, State Street provides financial services, and it has calculated that 11.5% of the world's financial assets flow through the bank's doors every day. So in these times of uncertainty and volatility, what kind of impact is the bank seeing, and how are you navigating it?
Sure. Well, first of all, uncertainty, like that's been the word of the last month, right? I think if we did a word cloud, that is definitely the word that would come up and is most prominent at this conference and really across financial markets. So that has been what's been driving investors, absolutely. But importantly, the markets have been functioning. And that is despite record high volatility at certain points and also really record high volumes on certain days. And that's that's given us certainly some comfort. It's something that we monitor at State Street, across the board through various metrics. It's also given investors definitely certainty. But I think Eric makes a very good point, right, about that the debt burden and the impact that that could potentially have on the market. So whereas initially we saw the flight to quality, obviously, after Liberation Day in the form of US Treasuries, eventually that's come off. And one of the biggest shifts that we see now at State Street across the data is that emerging risk premium, particularly in the long end of Treasuries. And so obviously, why do you have that? First and foremost, it's the concerns about the economic impact of tariffs. But I think, and maybe especially from some of our foreign partners, right, there are questions about stability in the U.S., political stability. And then again, Eric's point, it is that massive debt burden. How do we really absorb that? And how do we absorb that when two of the largest purchasers of U.S. Treasuries are now partners that we're talking about in less of a partner-like fashion, right? More adversarial, namely, obviously, China, and to a lesser degree, Japan. Mm-hmm. So, key themes, but again, high volumes, high volatility, but functioning markets. I do think that shift in investor risk premium is something that we all need to watch.
Mm-hmm. Sarah, and just to drill down further, some of the sentiment we're getting in the conference is the sense that investors are waiting for the catalyst to move on their plans. I wanted to ask you, from your vantage point, are you seeing your global clients sitting on the sidelines and waiting for something? What would that be to prompt them to move on their plans?
Yeah, so there hasn't been a waiting on the sidelines. Mm-hmm. Look, in the market, we've had a very high overweight in equities for some time now. So what happened after April 2nd is we saw some of that overweight come down pretty drastically, right? From like a 5% overweight versus historical average to about 1%. And that was pretty clear. We started to see it, we've seen it now tick back up again, right? As there are periods of stability and different moments and different positive statements coming out of the administration. So it is a move, I think, to more neutral. So we're not yet back at that 5% overweight, but that trickle back up has really showed us what we've seen in the performance of the equity market, right? I think we're near flat. Last I checked for last month, unless something's happened like in the last half an hour, which is totally possible. The other thing that we've seen, interestingly, is a regional rotation. So if we look, again, I'll go back to that overweight. If we look at that and how that's come down, Europe has been the beneficiary of some of that. So that US domestic equity overweight has certainly moved to Europe, and you would have seen that with the performance of some of these European markets, right? Like Germany, Poland has just had incredible performance over the last month. Outside of Europe, Brazil. So that has definitely been a factor. I think, look, investors are trying to be a little bit more neutral. Every day is a new day. The market is not driven entirely by fundamentals, right? We saw that from this recent earnings season, right? Even companies that have outperformed, like you didn't see the same uptick in stock performance that you would see in a normal period. So investors cautious, tentative, but definitely they're still involved in the market.
Ruben, Bancoppel also provides financial services, but it's more focused on the Mexican consumer.
Yes.
And I wanted to ask you a similar question, but looking at the audience that you serve. How are you seeing the Mexican consumer acting in the last few months, and how are you seeing the trends going forward?
Well, the economy is strong. Consumption's still up. It was a great Christmas season, but it's hard to compare, though, because February had one more day, and then our spring break, which is Easter week, was in April this year. But still, a very strong beginning of the year. Consumer confidence the high was 50 in October, today's 46, so it's still very high consumer confidence. Also, the president's rating is very high, which helps with confidence in consumption, of course. The the noise of the free trade agreement negotiations, I feel and I see that it's not as high as used to be, or as it was only, not even 5 years ago. It was signed in July of 2020. So it's great to see it again. And I think there's a lot of opportunities to improve it. It was a better deal in 2020, should be a better deal in 2025. And it's so ingrained. If you see uncertainty, yes, globally, but if you see regionally, everything's so ingrained in financial services, airplane manufacturing, also advisory. I mean, look at this panel, how varied it is, and it's in companies that work all over North America. There's so much to do. The president came up with Plan Mexico, which is doing 100 projects of areas to further develop, to catch more nearshoring, and to be a better service provider for the supply chain in North America. It's a $1.8 trillion trading economy, and it's one of the most powerful in the world. It's today, 27% of the world's trading is in North America. We should be able to get back to 30 very soon.
Yeah.
So
So it sounds like at Coppel you haven't seen softness in the economy. We know that some analysts have revised their estimates for the Mexican economy to be a bit slower, but so far you're not seeing then an impact in the consumer.
the consumer is still maintaining their purchase, not a boom, of course, but it's a changing of a president, as you know, and a changing of the president in the U.S. So that creates turmoil. But if this is turmoil, well, great.
Eric, Bombardier is a great example of a company that has leveraged its integration across North America to bolster its supply chain, building planes across the region. What are some of the lessons learned from building operations that you could share with us?
Yeah. No, I think you're absolutely right. We're probably the perfect example of leveraging as much as possible USMCA and before that NAFTA. And actually it goes back to 1979. You know, the first trade agreement for aerospace was made in those years. So this is like almost 50 years ago. And we clearly shape up our supply chain around those possibilities. And I think today what's happening is, if you think about where we are, this is so integrated that, you know, I'm a proud Canadian, but at the same time, we are North American in reality. You know, I always give the example that in some cases, I have more US content on our product. Actually, 3 out of 5 product we're producing have more US content than Canadian. So, and there's a lot of, you know, we have a significant facility also in Mexico. So we've been trading partner for many, many, many years, you know. So, and aerospace has, you know, the characteristic that this is not something I can move manufacturing from one country, you know, in a heartbeat to another country or another plant, even within our own country. It takes time. It takes like 4, 5, 6 years to move a major structure. So, and at the same time, I think that, you know, I'm a firm believer that common sense will be what will dictate what we do next, in a sense that if you look, and I think you touched that a bit, I'm super optimistic also about the long future growth. There'll be maybe a few bump on the road, you know, in the short term, but I think common sense will prevail, in a sense that, you know, I think America, you know, North America has moved a long time ago from being dependent of manufacturing job. It's not like today we have 15% unemployment or 12%. You know, there's only 4%. Actually, I was talking to a colleague the other day that was hoping to build a plant in the US. He said, I've made 7 business cases, you know, in different states. You know, I could get the financing, I could get all the support I need, but the conclusion was that we cannot find the people. Mm-hmm. So at the end, I think, as I said, America has moved a long time away from just pure manufacturing job. There will always be manufacturing job, but I think there's a reality that, you know, it's been evolving over the years. So we're a perfect example in a sense that, you know, our product, you know, cross the border in and out. We're manufacturing fuselage and rear fuse in Mexico, bring them to Canada. There's parts coming to the US. We're building wings here in this country, bring them back for final assembly in our country. So, and we're the example. I have 28, Bombardier has 2,800 supplier in the US. So actually I have more than I have in Canada supplier because we've been working together. Engines come from this country mainly, avionics systems, and a lot of other components.
Eric, and the jet business is really interesting because it also serves as a unique thermometer for consumer sentiment. We were just talking about from an investor standpoint, from a Mexican consumer standpoint, but what can you tell us from the jet orders, what you're seeing in terms of the dynamics, for example, from demand for ultra-high net worth individuals or for the commercial segment? What is that looking like?
It's been very strong for the last few years, okay, in a sense that there was a bit of a reset. I think COVID was for our industry in business jet, in private jet, a real accelerator. You know, if I look at the, you know, we have a bit more than 5,000 airplanes flying around the world as a company, business, private jet. If I look at the hours they were flying these planes in 2019 and where we are today, it grew up by 40%. And actually it went up by another 3% since last year. So there was like a new normal established. And the reason is fairly simple. I think, you know, it was an accelerator, COVID, in a sense that a lot of people in summer 2020 who could afford it, they bought hours, they bought, you know, different things, and they tried to fly. I was very optimistic at the time that they will not go back to fly commercial because when you've experienced it, and you know, this is a tool that we are offering. You know, there's all kind of perception, but the reality is the people that buy our product are people that are, you know, have a global business. You know, they are one day in Singapore and 2 days after they need to be in Dubai and then in London or New York. They fly all around the world. They would never be able to do that if they would fly commercial completely. So our business makes people more effective. We had a real readjustment in the last couple of years, and we continue to see that trend. The reality is the wealth also that's been available in the world, there's more and more people that could afford it also.
Before I go on, I would like to note that you can also send your own questions. I have an iPad here, and they will be on my screen if you submit them. There's a QR code that should be going up shortly that you can scan if you're interested in submitting some of your own questions.
Can I just add, sorry.
Go ahead.
Because you both talked a bit about consumer sentiment, ultra high net worth, and then you talked more broadly. I was struck, and I'd be curious, if you looked at the credit card earnings that came out in the last bit of time, you also saw a pretty good, resilient consumer across all and there's always conflicting data out there, and yes, some of that happened before April 2nd but there wasn't evidence that we were seeing what has been a strong consumer-driven economy really pulling. So I don't know if you've seen other data since.
Yeah. Like, I think there's a lot of thought that, you know, we haven't yet seen the impact of tariffs on the consumer. And, you know, there are a number of factors, you know, one being, you know, inventories still need to be worked through. I think there's also just, you know, expectations from consumers on, you know, what is coming down the pike. But, you know, I think we need another, you know, at least, you know, 4 to 6 weeks to start seeing some real numbers come through at the earliest.
And I would add, that's full employment also in Mexico, U.S. and Canada.
US,
so it's, everybody has a job.
So time will tell. How these trends unfold. Eric, I did want to come back to you to ask you what are some of the key trends that McKinsey is seeing across North America in terms of the effects of the uncertainty brought on by the tariffs and how you're working with CEOs to work through the challenges.
So there's no one particular trend. I think it depends a little bit of where they are. I think everyone is taking a hard look at their supply chain, and they're all starting to look at how do they view the world emerging, right? Because at some level, as a CEO, you have to take a step back and say, I have a perspective. By the way, with that perspective, I have to be able to adjust when I learn new things. But as you do that, you can say, by the way, there's a whole bunch of companies that feel like they're suddenly advantaged. Because maybe, for example, they moved a whole bunch of manufacturing out of China and into, let's say, Vietnam earlier. And so now that they have a supply chain that can actually meet the demand, and now they have a cost structure that looks very different. So I think there's already a set of winners and losers that are going to start to emerge, and they're starting to get their head around that. And the folks that are not as well positioned are saying, okay, what can I start to do and how quickly can I move? That's kind of number one. I think the second is they are starting to look at whether it's price. as a mechanism. Well, how much pricing, as we lived through COVID and supply chain shortages, there was obviously with inflation is really a function of price, and the pricing power was extraordinary. Does that pricing power still exist? I think we don't know. And so I think they're starting to figure out what does that look like. I think the third is they are, in some ways, you don't waste a crisis. And at some level, the umbrella of uncertainty creates a motion of crisis. And in crisis, it's an enormous opportunity to start to rethink what you do, right? Whether that is the productivity, whether it is how do I deploy the technology. All of those components become much more important, and you can sort of push things that you couldn't push as easily, whether that's organizational redesign, whether that's how you think about the talent strategies, whether that's thinking about, frankly, parts of the business I might not want to stay in. You do have a moment where you sort of have this umbrella around you, and I think everyone is starting to look at those in this moment. The thing that I am not seeing, which you hear a little bit of, is you might say the deer caught in the headlights. You're not seeing anyone that says, I am not moving forward. I think everyone is super mindful of what are two-way doors versus what are one-way doors. Two-way doors, I can adjust. One-way doors, I can't. I've gone through it. There's not an easy return. And anything that looks like a two-way door, why would I stop, especially if I have my own convictions or a range of outcomes for which I have to navigate? And so the thing that I'm just not seeing is things slow down, which is the thing that you hear now. That doesn't mean the economy won't slow down a little bit, because I do think the investments we're talking about and the changes in the business can take years to kind of come to fruition. So you can still see an economic slowdown while you do that. But I think even the economic slowdown, or the degree of it, is uncertain. And I think most CEOs I'm talking to are kind of continuing to push forward.
Eric, Bombardier posted first quarter results just last week. That included very optimistic guidance after in the previous quarter the company had said it wasn't feeling confident enough to provide a guidance. So that seems like a very positive sign. So what kinds of opportunities are you seeing in USMCA integration? And do you find that with the current environment, you would be more inclined to invest in North America? Is that affecting your CapEx decisions?
Yeah. I think Eric just said, right now it's not like, there's a situation that needs to be addressed in the short term. But I don't foresee, we're going to get through this. And I don't, we're just moving forward at the end of the day. We had our strategic plan. We reconsider. We said, we still want to grow, a couple of things in the company. But at the end, it's not going to change completely the way we see the world right now. First, we have a bit of a speed in aerospace at which we can turn around, but, for the reason I mentioned before. But if you look at our Q1, there was a bit of uncertainty. You have to realize the day that we were going to provide guidance, in early February, President said a few days before, 25% in Canada, and nobody understood how it will work, Then a couple of weeks later, we realized that we could deduct the US content, and then after we were like under USMCA, back under USMCA. So it has created a bit of uncertainty. So we couldn't get out and provide guidance. We didn't understand the rules we were playing in. And the reality is that, things have clarified within a fairly short period of time. And I've seen, the reaction in the market for about 3 to 4 weeks were a bit of a slowdown. People were like, wait and see. It reminded me when we had the bank crisis 2 years ago, for about 3 weeks, like nothing happened. So you have a customer that is almost ready to sign by an airplane, and then he says, oh, let me see. But then he's going to sign in 3 weeks or 4 weeks maybe. So we lost a bit of momentum, but I think, things will come back to a more normal. You're aware today the Prime Minister of Canada was meeting with Trump, so I didn't had a chance to watch TV too much, but I was looking at the headlines, so I don't think there was that much drama, but I think it's the right thing to do right now to have a dialogue and revisit the USMC. So I think, every crisis, you never miss a good crisis, you said that. And I think there's one right now. Let's revisit how we do things. And in our business right now, it creates quite a bit of opportunity on the defense side. So there's opportunity to review your structure, but there's also new business opportunities that are becoming almost exponential to what they were like 2 years ago. There's that pressure right now and tension about increasing government spending on the military side around the world. You look at Europe right now, which buys 64% of their military equipment from this country. And right now they're saying, hey, maybe we should do a bit more on ourselves. So we are benefiting of that. So again, with every single crisis, you need to look at the opportunity that are being laid out and be opportunistic and capture them.
And you were mentioning just now that example a couple of years ago when clients were almost ready to sign, but then they stopped. And I wonder if we're in a similar moment where you're getting a lot of questions from clients. They're making very large contracts, long-term contracts, and if you're getting more questions about what would need to be thought through given the current environment.
But I think the people that I've met quite a few CEO here this week, and I do this on a regular basis because they buy our product, they're our customer. The majority of them right now, I think that they believe it's a short-term thing that needs to be addressed. And I think when all that situation is being addressed, and I said that to someone today, the president is right in a sense, that there's too big of a deficit because this is going to affect us longer term if that deficit is not being addressed. We're all optimistic, but there's a problem here that needs to be taken care of. I'm not sure I agree completely with the way to take care of the problem, but the problem exists. And so that's why I remain optimistic that within the next 12, 18 months, that agreement will be revisited, with maybe new rules and changes, of course. But I think after that, we will just carry on, and those opportunities will be maybe even bigger than they were.
It's interesting, if I could just add, because I always think, the market is sort of like the silent judge, always, right? Like politicians say one thing, journalists say one thing, and and we consume that as residents, as just readers of journalism. But the market is sort of that judge, right? It can't really be coerced, coached, put into a corner. And I think a lot of why we've seen the market come back is that there is this optimism, and there is some belief that while we started at these huge numbers on tariffs, we are going to get to some type of normal. It's not going to be what it was before. I don't know, maybe it's a baseline of 10%, but it seems increasingly that is the expectation, that we will get to a more a stable point with a tariff, and we will work that through our systems and then be able to come out with, I agree, maybe even better trade agreements. Because I don't see how we walk away from that, right? Especially in an environment where the U.S. wants to limit its reliance on China.
I mean, the other thing I hear a lot from CEOs is the conversation behind closed doors is very different than the conversation in front of the press. And so behind closed doors, there's a lot of good reasoning and willingness to listen and willingness to adjust. I think we have no idea, because they're not public, the number of exceptions that have been made based on individual executives going to DC and actually saying, look, do you understand what this does? And it's remarkable. There's a process to go through, but the number of exceptions that have been granted is significant. And so, again, this is also what I think is starting to give a little bit more confidence, is when the executives start showing up and realizing they have someone on the other end that is willing to listen and to adjust. It gives them more confidence, and that starts to permeate through the network of executives that therefore gives them the confidence to move forward. And so that is another thing which I think we are starting to see.
That's a very good point, right? There's all the things that happen behind closed doors that are allowing some of this business to become unstuck.
Yeah, but this is exactly right. I'm having continuous discussion with our customer. I feel that they want to move on. They're not stopping what they were planning to do like 3 months ago. They're still moving ahead. And you're right. I think there's a willingness to listen in Washington and adjust and adapt. That's exactly what gave me the confidence to provide guidance last week. I said, here it is, and we're moving on.
But you were not in the majority, right? In terms of forward-looking confidence, there was still I think you have to say,
Absolutely.
a number of companies that either withheld, withdrew, or just gave multiple scenarios.
Absolutely.
For forward-looking. So it is still a factor out there.
It is.
Right?
I thought one of the most powerful things I saw was companies that gave 2 sets of guidance.
Yeah.
Because it sort of framed for DC, this is what we think we can do. But if you intervene in a way that really holds us back, this is what it looks like. And I think that alone started to paint a very clear, set of guardrails that everyone had to think about what that means.
Exactly. The scenario with tariffs and without tariffs.
I mean,
or with, yeah.
Oh, wait a minute.
seen
Is that
that a
really?
Exactly. It made it very real. Right.
Sarah, we've seen the integration of capital markets across North America to rise over the last couple of years. What are you seeing as the strengths of the current landscape, but also where are some of the opportunities for improvement?
Sure. So look, I think it's been established, right, that the economies are really fundamentally linked. And that's like not just by geography, but by design with, through USMCA and NAFTA before that, frankly. And so when you have the economies linked like that, you need to have a capital market system that allows that free flow of capital throughout, right, to support all of our companies. And we've seen some really notable I guess coordination across the region. One of those that we were very, very closely involved in was accelerated settlement for securities trades. And that's something that we saw last year where Mexico, the US, and Canada all came together for like a coordinated shift to an accelerated trade plus one settlement. Which was a huge move, actually required again, massive coordination, provided a lot of liquidity for the market, and really set the standard, I think, for global trading. So North America came out together, and we now lead the market with that model. And as a result, we've seen Europe and Asia, working on their own accelerated settlement models, and those will come in, I think it's like 26 and 27. But I think that was a great example of where we set the global standard together. And there are a lot of other examples of cross-market integration. I think about cross-border, asset holdings. That's one clearly, but also cross-listings on our exchanges, on the different exchanges. So you have a number of Canadian companies that are listed in the New York Stock Exchange or NASDAQ. You also have US ETFs that are listed in Mexico on the exchange, right, in a form that allows Mexican investors to buy international assets. So that, financial integration, that doesn't just go away. And I think that continues to get deeper. There are a lot of opportunities to increase the integration. I think we can align better on some, regulatory matters. I think things like trade standards get better. The ease of listing on each other's exchanges, disclosures, so. There are things that we can work on, but they're being worked on now. So the market recognizes those, and that hasn't stopped with these tariffs.
Mm-hmm. Ruben, Bancoppel serves a lot of clients that are at the bottom of the pyramid, as they're called, and so it's a big recipient of remittance flows from the US to Mexico. Have you noticed any shifts in trends in remittances over the last few months since Trump was elected?
No, it's maintained very strong. Last year it grew 10%. This year so far it's grown 1.5%, but it's maintained its volume mostly. It's mostly impulsed by full employment in the U.S. Remittances do better, and we have full employment in the U.S., full employment in Mexico, and then the impact that remittances have in Mexican families is tremendous. It reaches the least developed areas in Mexico, their families. It creates businesses. It creates basic income for families. It creates also an anchoring for the families here, and the person in the U.S. will basically go help their family and go back and forth with helping both countries. And when you were saying later the stability that we've been seeing, also Mexico. Well, Mexico has a very strong currency, very controlled inflation, controlled fiscal deficit, and still growth, as still companies are coming in. So it's a very strong market in Mexico. Formality is growing. We'll talk about that a little later, but more formality makes for more families with more social security services that help them develop much better in their families and their homes and their environments, which again, it's a lot of developments going on in Mexico.
Mm-hmm.
Hey, one thing you have in Mexico too is amazing people willing to work. a good schooling system also. You know, like we established ourselves in Querétaro like 20 years ago now, time's flying, but you know, we built a school with the government. You know, the school is it's always young people coming in, and the quality of the training and the workers we got is like amazingly good, very solid, very solid.
Very optimist. Yes. And also the other part about remittances is how you bring them into the financial service sector. Most of our remittances are digital. Actually, 99% of the remittances from the US to Mexico come through a banking transfer, not through cash going through the border. So that's interesting. For us, 70% of our remittances go direct to an account. So not with the little number that you go and identify yourself and they give you cash. It just goes direct to an account. In Mexico, the banking system, especially us, we've been entirely with biometrics for all our customers for the last 20 years or more. So we have all that data, all that information, and that allows them to be a part of the financial service and get more financial products in the future, savings, have a debit card at least, go to an ATM, and then credit later, and also insurance if possible. That data makes it possible.
Yes, and that's such an important step because, as you said, there's so many people in Mexico and across Latin America, this is not a problem unique to Mexico, that are still out of the financial system and they're not integrated. Yes. Something else that's been interesting about the current administration is that they designated the cartels as foreign terrorist organizations. And I was wondering if you've seen any impact in the cross-border operations for the bank.
I think the important part is that both governments work together, hand in hand in this and any other conflict. We have all the information for all the customers, as you heard. It's all with biometrics and everything. So it's data transfer between the government, but also the Mexican Banking Association is working closely with regulators to see if there are any changes needed and to be very aware of what impact it have in the free flow of currencies and cash and money and transactions in the border. As you were saying, it's so deeply integrated. Just how do we help it continue to flow as fast as it flows, as easy as it flows, with the necessary information that the governments might need. So.
Mm-hmm. Something else that's on all our minds as we think about North America and the future of North America integration in the economies is the USMCA review. That's coming up in 2026. We know that the initial conversations and the consultations should be starting in the second half of this year. So I wanted to spend some time on that for a moment. Eric, from your vantage point in McKinsey, I wanted to ask you from your communications with CEOs and business leaders, what are you hearing at some of the key things that they would be interested in seeing to improve the USMCA?
So I probably don't ask the right question because this is not the topic that comes up all that often. It's much more in the moment of what are the tariffs and what. But I think at the end of the day, I think most executives want some level of confidence in whatever system they have to operate in. Mm-hmm. So at some level, I think, I can't remember who said earlier, but the idea of certainty is an important word. Certainty and trust are two important words in the moment. And I think most executives can live with a range of outcomes. Obviously, I think you pointed out we're 27%. Like, there's more we can be doing and more that we can be doing in a way that actually gives real advantage. But I think more than anything else, they want certainty. They want to understand that whatever is agreed to and aligned to, we will operate with so that they can feel comfortable. And I don't hear a lot of, I'm looking for, and that just may be me not asking that question. But I do think in this moment, certainty good, certainty bad, certainty is a good thing. The uncertainty is the one thing you have to be mindful of. And so I think that's all they want.
Yeah. Eric, for the aviation sector, the manufacturing sector, how could the deal be improved?
I think if I think about aerospace, the deal that we have today is very good. It's pretty much like everything is open. What we have today, just because of the impact of what's being done, like on aluminum today. There's a 25% tariff on aluminum and steel. If I bring our main warehouse at Bombardier is in Chicago, in the U.S. If I bring a part from either Canada or even a supplier from Europe, today we need to show the parts in a piece of paper that says how much aluminum there is into this. We didn't have that piece of paper, so now we're chasing suppliers. So it creates a heavy level of bureaucracy, and between us, the custom agent don't know what to do. So hopefully, you know, I think that the best agreement, to answer your question, we can have would be an agreement where, because we've seen this in the last couple of years, you know, then all the three governments are taking exceptions. You know, there's an agreement, but we're going to tax the wood coming from Canada or put a tariff on. I think we should all respect the agreement as is, you know, and say this is a real free trade, and let's see, you know, but there's still a bit of protectionism, you know, part of what's being done. So it was not perfect. It will probably never be perfect, but I think if some improvement in between could be to basically limit as less as possible, you know, the real free trade.
Mm-hmm. Sarah, how about for the financial services sector?
Yeah, I just wanted to just touch on that, what Eric was just saying also. I think, look, going deeper and almost, you know, doubling down on USMCA, I think like that's a real opportunity in this market, in this economy rather, like where, you know, we're seeing shifts, right? We're seeing trade shifts. You know, we're seeing like Mark Carney say our relationship with the US is over. That could just be politics, but he said the historic relationship with the US is over. We need to find new trading partners, and we're going to be targeting Europe, right? So we're going to see these regional alliances shift and build, and some will be more meaningful than others, right? At the end of the day, North America is still a massive, massive market. But in that type of environment where you have more fragmentation, like why not just, the opportunity is to go deeper on USMCA and to extend it. So take out some of these exceptions, but you know, maybe we move on from trade to services, info, technology. You know, you could really make this an even more powerful alliance. I know it doesn't seem like that's on the table today, given everything that we're hearing, but I think like that's what the opportunity is, because we've been on this path of deglobalization even pre-Trump too, right? And so I think that's probably here for some time, right? And certainly the tariff announcements have pushed some of our historic partners more into that mindset of deglobalization. So if we can lead as a region with a more powerful alliance, then again, like that just makes us much more competitive versus the rest of the world. And unfortunately, like that's the frame that we have to look at things at right now. Right? That's sort of where we are.
One thing I did not realize myself was that, I don't know, I was under the impression that USMCA was pretty much covering like a lot of things, but there's a lot of exceptions.
Yeah, it's about
I became
50%
smarter in
that
the
are
last
covered.
couple of months getting interested, but clearly, you know, there's pages and pages of exception also of things that are not part of the deal.
Mm-hmm. Mm-hmm. That's right, and I think that the statistic is that it's 50% that they're using that code to enter, to conduct trade, and so there's a question about how to bring in the remaining portion.
Absolutely.
And how about you, Ruben? How would you improve the USMCA for the financial services sector?
As USMCA gets better and this region is more highly integrated, we're just going to have better jobs and more investments, therefore drive consumption, and have better jobs and life for all of North America. I think we have all the natural resources that we need, and we just have to put them in use and have the right investments, have the right laws in each country to enable companies to open up faster and have trade with one another. The President's Plan Mexico is a great idea that should work. There's enough capital in Mexico. There's a lot of capital in the world, of course, and Mexico has a lot of capital. I hope the Afores, the pension funds, can be a part of Plan Mexico also and invest in these parks or these special areas that they're doing, and find also other mechanisms for investment, both
Ruben,
local and national.
Since you mentioned the Afores, what opportunities are you seeing for the pension market in Mexico?
Oh, many. The pension system in Mexico today is $350 billion. It's a system that started in 1997, I believe. It's almost 30 years old, and it's worked very well. It's worked very well. Savings for all our affiliates, as we call them, have grown, and it's a great system. We have a close relationship with them, and there was a reform with the regulators, and there was a reform 3 years ago that increased savings from basically 8% of your paycheck to 15% until 2030. So it's going to take $350 billion today to $500 billion, from 20% of GDP to almost 40% of GDP in 2030. So there's a lot of capital to be invested. We need to have a much more sophisticated system of financial products and services in Mexico for investments to flow better, to have more private equity, to have more funds, and to be able to invest in more things with this money of the Mexican workers. The other thing today, about from 30 to 40 cents of every dollar are invested abroad, not only in Mexico, in hard currencies, in equities, private equity, which is growing, and also international stock markets. That should be growing over the next years for more alternatives to grow in Mexico and also abroad, because this substantial growth of assets under management of the system has to go somewhere. We have so much capital to be deployed. It's growing 15% a year for the next 5 years. And we're working closely with regulators to make that happen in time, and also help regulations to have more funds in Mexico and to have more growth for our affiliates, for all the Mexican workers to have a better retirement when that time comes.
Yeah.
So I'm just trying to think about this wave of conversations around USMCA and the trade agreement. There's almost a silver lining of the last bit of time, and then there's a bit of recognition of how it can grow even more and create more confidence. So the reality is when the tariffs were first announced, I think everyone assumed they were not going to follow USMCA. So we were basically backing out of that agreement. But the reality is that is not what happened. Yeah. And so I think one of the reasons you get more confidence is when you realize things that have been negotiated are being upheld, and now you have a framework for which to expand. That should give people a bit more confidence. The second thing is, and again, I'm sure I don't have this quite right, but it's something like 2/3 of all US trade happens with 3 countries, right? It's China, it's Canada, and it's Mexico. If you can solidify and expand the relationship with Canada and Mexico, what that does to give business confidence about how and what they can do from a supply chain, from a manufacturing, from a trading point of view. And so at some level, that can't happen fast enough. And it does give you a basis, especially when you think about some of the broader geopolitics, of if you can solidify that, boy, it starts to give you something to look forward to.
Absolutely.
Yes.
Well, while we're on the topic also of financial services, if you allow me a small tangent. Sarah, I wanted to ask you about crypto, because I know that State Street has been building out the capability to hold digital assets and had been reported to be exploring ways to settle payments on the blockchain. So with this current crypto-friendly administration, is the bank looking at expanding the offerings?
So look, we have been in digital for some time, right? So at State Street, we've been doing financial accounting and fund administration for digital assets for a while now. And our tech, our infrastructure for digital assets is going to be complete by end of year. So that's something we definitely recognize. This administration is certainly digital friendly, and one of their priorities has been clarifying the regulation around digital assets, and that's like key for these assets to get any real like uptake into the main financial system. I think it's something that a lot of participants have been asking for, waiting for. So we are certainly very close to them on that. If you think about digital assets, there are there are different aspects to it, right? I think what we're focused on is areas where there's some like real commercial applications, and so what that means to us is things like distributed ledger technology, smart contracts, and also tokenization. Like those have some real use cases with our investors. Our investors are looking at like, how do we tokenize our funds? How do we tokenize private assets? And that's something that we need to be very close to them on. I think one of the applications that's very exciting, I mean, exciting if you're in the markets, is tokenization of collateral, for instance, right? So if you can take like a distributed ledger technology to automate your calculation of margins and to automate like how you pledge collateral or the pledging of collateral, like that has some real efficiency benefits for the market, right? That just improves your operational metrics. It can free up cash. It can reduce, RWAs. It just, again, it goes to this theme of making the market a lot more efficient. So these are the areas that we're focused on. Again, like we follow our clients who are, largely investors, asset owners, sovereign wealth funds. But that's where we see some real applications, and we're pretty excited about it. I do think that there are some, in this administration, I do think there's some experts in the industry who really want to look at responsible innovation. Mm-hmm. And that's going to be a differentiator. I mean, there are some inherent risks, right, in some of these digital assets. Again, we're really focused on where is the system going to get the most traction.
Mm-hmm. Before we go, I wanted to come back to the initial question of what North America trade will look like in 5 years, and whether there's also opportunities for the region to open up to, or for territory countries to open up to other countries. But I want to actually combine that with a question that I got from the audience, which said, this was the most optimistic panel I have heard in terms of the economy and the future. Yeah. So I'll put you all on the spot a bit. Are we being too optimistic? Is there a chance that the USMCA doesn't work out, that we are moving to a world that's not looking at multilateralism? It does seem that there's this sense that the USMCA alliance will continue and that this will create opportunities, but is there a less optimistic scenario that companies should be preparing for?
So can I start with that? Because as we were talking, I did think this sounds like really pie in the sky. Like we're really positive, right? All of us. And are we sort of talking our own book? I don't know. Like, again, I go back to the markets as sort of a judge, but I have some real concerns, right? The market uncertainty and volatility is real. It's there for a reason. We've had really strong statements coming out of some of our partners as countries, right? I mentioned Canada. There are multiple others. If you talk to foreign investors, there is some. Maybe not, you can never say never, so maybe not permanence, but there is a long-lasting impact to the actions of the United States and this administration in the last 5 weeks. And that's not something that you can easily turn away from. So look, I do think that at the margin, we will see for a period, again, some reduction in investment in North America, in the US particular, and we have heard that, right? But ultimately, like in the medium to long term, where else are you going to invest, right? Like, what's the next best thing? The U.S. market has like, I think it's a 52 trillion market capitalization. Like, Germany is like 2 trillion, right? France, 3. I think China might be the next biggest, and that's at like 11. Are you going to go whole hog into China? So there are limitations, and this U.S. market is still the deepest, broadest market where we still today have very strong innovation. We want to make sure that continues. There's a lot of questions around that in the broader, political discussion about, how we think about things like immigration and how we continue to attract the world's best. So we continue to drive innovation. So those are all concerns. But again, if I look at sort of the medium to long term, you have to be positive just given some of the fundamentals.
But I think, if I may, for a very simple reason that I'm optimistic, is we need each other. Yeah. Mm-hmm. For a different reason. Okay, like, I think Canada needs to have access to the US market to run its business. I do, certainly. I think the US needs Canada for natural resources. Just think longer term. We have like a crazy number. I think it's 60 or 70% of the water reserve of the world, okay? We're 25% of the oil coming to this country. Your farmer are using our potash for 90% of what their needs. So for all kind of reason, I think we need each other. And that gives me comfort that at some point we're going to find a solution. That, as I said earlier, there will be bump on the road, but I think longer term we'll be finding a solution altogether because we need each other.
I think we've all taken a medium-term horizon to this, and so I think it's very easy to look by the, if you will, the fog of the moment and say what's going to come out of the fog will be okay. I think you can paint some negative scenarios. I actually think less so when you think about U.S., Canada, Mexico, in large part because, you know, where's the labor force for the U.S. to bring? It's just there's a limit to what you can do, and so you're going to need those markets to naturally collaborate. The reality is, you could imagine scenarios where tariffs get put back in place as they were outlined on April 2nd. The world really does, as a result, bifurcate. You go through a period of both economic slowdown and inflation, right? That can be devastating for a long, I mean, there are quite negative scenarios. I just tend to think we will get through them. The thing that I worry more about than anything else is what happened on April 2nd is effectively stroke of pen risk in a way that we have not seen coming from what has typically been the most stable and kind of the largest overall economy. And I think that stroke of pen risk has put a fear into trading partners and beyond trading partners, partners that we think about from a defense and military. And I think that can take real time to heal. I guess I just believe, I can't, and maybe it's my own myopia, I can't actually see a world where that doesn't heal because you can't imagine an alternative world. And so while you can be scarred in the moment, at some point, cooler heads have to prevail. And I just generally am optimistic that we saw the market reaction to April 2nd, right? And we're going to have midterm elections in the US in a year.
Yeah.
And when you start to put the pieces together and you realize some of this is kind of how far can I go? I can test it and see. I just can't imagine we're going to want to go back there. And so that's a bit of the optimism. It's that whether it's cooler heads or rational will actually prevail in the end.
Yeah, I would add that seeing it from Mexico, we have a very stable country again, stable currency, controlled inflations, a lot of employment, educated employees or educated people. And the only, probably it's naively optimistic, but still the only problem would be not to take advantage of what this region is going through and what the world is going through. Logistic lines have to change, and we have all the resources here. We have the labor force, right? And yes, I believe that in 5 years, it's going to be a much better region, a much stronger region, and we just need to get our act together. Again, and if there is a recession, which I don't see it, still, banks are very well capitalized, companies are very well capitalized, consumers have money or have jobs still, at least. So it's a very strong region.
It is.
Very strong.
So that seems like a good note to close on. That there's some consensus in the room, and like we were saying, there seems to be this current of thinking that maybe you can't have a trade war with China. I've heard this before, and with your closest partners, Mexico and Canada. I don't know how you, if anyone would like to comment on that before we go, if that seems like a reasonable assessment, and that's part of the optimism as well.
Well, I just go back to, like, the one thing we know this administration is focused on is reducing American reliance on China. So that, like, is not changing day to day. And I just don't know how you do that without relying on, Canada for all of the things that Eric mentioned, and also on Mexico for, agriculture, low-cost skilled labor. How do you do that? So I think that, again, this region is going to assume even more prominence than it has, and I think that in Mexico, Canada, I think that's a very big part of this diversification away from China.
I think clearly that in the next step, we need to foresee a deal between, the three countries, to exactly the point you made. You mentioned there's a reality. There's a midterm coming in, 16, 18 months, not even? So that's the window the president has right now. After that, you know more than I do that if you lose Congress and Senate, that
Changes the game.
changes the game completely. So.
We'll leave it there for now. Thank you so much
Thank
to
you.
our four
Thank you.
panelists.
Thank you for
to
attending.
Milken Institute
you.
for inviting us
Good.
Thank
for
you.
this great